Palantir stock is dropping hard today as I'm recording this video. The stock is down by 9.51%. That's $19 a share down in a single day, okay? And while that is a very sharp drop, when you zoom out even just to a 5-day chart, the 5-day chart doesn't look so bad. The stock's down 1.85% as of recording this video. It might change a little bit by the time I get to the editing process. And then on a 1-month span, the stock is actually up about 4%. 6-month span, as we know, stock has gone crazy, up about 51%. Year to date, nearly 150%, and in the past 12 months, 350+% gain on Palantir. But this one day being down roughly 10% is still a major drop. So in this video, we're going to detail exactly why Palantir is dropping today and what you can learn from this with other stocks in your portfolio or other stocks you're looking at that are in similar situations to Palantir is right now. I'm excited to jump into this video, but first, if you're not subscribed already to the channel, go ahead and click that subscribe button. We're getting really close to that 10,000 subscriber milestone. That's very exciting. If you can help us hit that, it would mean a lot. All right, let's jump into the video. So Palantir just reported earnings one day before I'm recording this video. They reported earnings last night for Q3 of 2025, and based on this 10% drop, you might think, well, they probably had a rough earnings. Maybe they missed on EPS. Maybe they missed on revenue. Maybe they actually had to bring their guidance down for Q4 2025 and full year 2025, something like that. Something must have missed inside this earnings report. Maybe they went from crazy revenue growth acceleration to actually having revenue growth deceleration. No, literally none of that happened. This was the closest you can possibly get to a perfect quarter for a company like Palantir. It was an absolute crazy beat on EPS, very respectable beat on revenue, amazing guidance ranges, record high net income, record high operating income, margin expansion like crazy, perfect balance sheet. It was an absolutely amazing quarter, okay? So a newer investor might be confused as to why Palantir would drop after that. It's all about valuation, okay? The valuation for Palantir has been pushed to such insane levels that there is a limit to what Wall Street's gonna wanna pay and even to what retail's gonna wanna pay for Palantir. Check out the valuation of Palantir, and then we're gonna compare it to another super high growth company just to see how much further the valuation has been stretched for Palantir in comparison to extremely high growth peers. So Palantir right now, as of recording this video, has a trailing GAAP PE of 686.75. They have a forward GAAP PE of 480.42. The trailing PEG ratio is an 8.8 and the forward PEG ratio is an 8.13. And then the last valuation metric I want to look at is price to sales. The price to sales for Palantir on a trailing 12-month basis, 139.54. Price to sales on a forward basis, 117.52, okay? Yes, Palantir's growth rates are amazing. Yes, they should command a premium valuation over their peers who are growing at much, much, much lower clips. In the quarter they just reported, they grew revenue by 63% year over year, and they grew EPS by over 200% year over year. Those are some absolutely insane growth numbers, so Palantir should command a premium over, let's say, the S&P 500. To compare Palantir's PE to the S&P 500, forward PE of about 22 on the S&P, that's not a fair comparison. But a much more fair comparison is to another software stock that's also a hyper-growth company, and that would be AppLovin. They have very different softwares, but they are both software companies, okay? So the ticker on this is APP, and the stock is AppLovin. Let's look at AppLovin's growth rates first and compare them to what Palantir just reported in this earnings. AppLovin's revenue growth rate on a trailing 12-month basis is an absolutely insane 78.91%. That is considerably higher than Palantir's. EPS growth year over year, 204%, very similar to Palantir's EPS growth, okay? So the growth numbers are either matching it or even higher than Palantir, all right? So let's look at the valuation. Maybe based on Palantir's valuation, if you haven't looked at App and you think that Palantir is the benchmark, maybe you'd think AppLovin has like a 200 trailing PE and like a 174 PE. No, it's nowhere close to that, okay? It's much more realistic. It's still a premium valuation, but they absolutely deserve it. Let's check it out. Trailing 12-month PE, 86.87, forward PE, 69.26. The PEG ratio is below a 1. Trailing PEG ratio is a 0.43. Below a 1 in terms of PEG ratio is actually generally considered to be undervalued, even for a stock that's not growing like this, that's not growing at 78%, but more like someone that's growing at 7% and growing their EPS at 15 to 20%. That would be undervalued for that type of stock, okay? PEG ratio on a forward basis, 0.99, just about a 1. And the last thing we looked at for Palantir was the price to sales. Price to sales for AppLovin is 37.31, and the forward price to sales is 38.30. Those are still very high. The PEs are still very high, but they're not like 600 and 400 like Palantir for the PE trailing and forward. They're not like 130 and 117 like Palantir's price to sales, all right? So yes, they are still commanding that premium, but this is more realistic of a premium valuation based on the growth rates than Palantir's. It's just a valuation issue with Palantir. That is why the stock is dropping nearly 10% today. I would say there's a little bit of added downward pressure because the market is not having a good day as a whole. The Dow is down about 0.5%. The NASDAQ is way down, almost 2% down as of recording this video. The S&P 500 is down about 1%. And then the Russell small cap stocks is down about 1.5% as of recording this video. So it's definitely not a good day in the market. So that's definitely contributing to the downside as well. But the reason for Palantir underperforming the market by such a wide margin, nearly 10%, is on the valuation concerns. The valuation for Palantir has been stretched way too far. And when a stock gets to those levels, when it starts to drop, people are going to pile on and the downside can get very, very, very large very quickly. But also, as a long-term investor, some consolidation should be welcomed, all right? A stock's not going to go up in a straight line forever. We should expect some consolidation. We should expect some chill-out periods. That's going to help make those gains stick and provide a floor for the stock, all right? The combination of the price coming down a little bit and Palantir continuing to execute and fire on all cylinders is going to level out that valuation over time. There's a lot of work to be done on leveling out that valuation and making sure that this is a sustainable valuation that Palantir is sitting at, but 600 and 400 in terms of the trailing and forward PE is not sustainable. That's why we're seeing this drop. Let me know what you think in the comments below. Did you sell your Palantir stock today, or are you holding? Are you unaffected? What's your general consensus around Palantir? My personal opinion, this is no big deal. I'm not surprised whatsoever at all. I know what the situation is with Palantir behind the scenes in terms of the valuation, and I'm very comfortable with the fundamentals and where they're at right now with Palantir. All right, let me know what you have to say in the comments below about Palantir or the earnings or this drop specifically. I'd love to hear about it. Thank you so much for stopping by. Have a great day.